Well, I think it does seem like we're headed into a recession here in 2023. The magnitude of that recession is debatable, but I think it's at least a light to moderate recession. Potentially, it's on the order of 2009. So so I think it's wise to kind of like prepare for the worst, hope for the best, prepare for the worst. Don't get too adventurous. Like watch out for margin debt. Like I would really advise people to not have margin debt in a volatile stock market. And from a cash standpoint, keep powder dry. You can get some pretty extreme things happening in a down market. Like Brett Johnson, who was a CFO, who is a CFO of SpaceX, was at Broadcom in 2000. And he said that, and that's a good company making good products. And he said from peak to trough, I think in less than 12 months, Broadcom went down 97%. So like even if you had a small margin loan there, you got crushed. It subsequently recovered, and I think to much higher levels. But if there's like mass panic in the stock market, then you've got to really be careful about margin debt. But I mean, this is just as we know, the economy is cyclic. So we're somewhat overdue for a recession. And my best guess is that we have sort of stormy times for a year to a year and a half, and then things start to dawn breaks roughly in Q2 24. If I were to get, that's like my best guess. Recessions don't like booms don't last forever, but neither do recessions.
And it's a 14-year boom, so a 6-quarter recession seems like that might actually balance out. The last time it was 4 or 5 quarters, so it's not easy.
I have been guiding our portfolio company CEOs to be at cash flow break even now or extend runway to Q1 2025. And they're
25.
Yes, because I think Elon
not 24.
Elon and I are kind of roughly in the same place. We have been for a while, which is like, mid 24 is when the recession ends, and you need to give yourself 2 to 3 quarters of buffer so that you can go and raise around, which takes 1/4 to 2 quarters. And once you start to get escape velocity out of a recession, having money through end of Q1 2025, I think is a minimum requirement. And, of the companies that I think were the most precariously positioned, there was 5 of them that got their acts together and really did it. But these are all CEOs of companies that, if I said them, you would know some of them.
Yeah, I said Stan Druckenmiller. He, as you recall, last year he predicted that inflation would be lasting. This was in spring of 2021 when transitory was the word of the day. This year, he predicted the bear market rally we had in July and August. And I remember back at the Kotu Summit in May, or around that time, he was interviewed, and he basically was saying that as soon as there was a bear market rally over the summer, that he would then put a short position on. I don't know if he actually did that, but he said he was going to do that. And then it turns out that the summer rally that we had was a dead cat bounce. So he was right about that. And now he is predicting a hard landing in 2023 with a deeper recession than many expect. So sadly, I suspect he may be right yet again.
Friedberg, best investor for you, 2022.
Same. I had Druckenmiller. I indicated that he's been doing interviews pretty much every quarter for the last 2 years, and he's been pounding the table, telling everyone what's going to happen, and it all happened. And he even told people the trades. In mid-2021, he said he was short long-dated treasuries, and he was long commodities. And if you had put those 2 trades on at that time and held them to today, you would have made a fortune. And so I think he's extraordinary in his ability to kind of see macro in a way that others don't, but also to take extremely brave action with his portfolio. He's renowned for how big the bets are that he makes and how quickly he can change his mind when he's wrong and make another big bet and still get himself out of the hole.